Hello viewers, we are going to discuss with you about RBI's monetary policy failure in controlling and running the market mightier forces. Here RBI has failed to control the volatile currency market, bond market, stock market, Forex market and crude oil market. And the result is appreciating rupee, higher interest rate, inflation, negative GDP growth rate and unemployment of national resources at the highest level. And finally, it has put pressure on RBI to control these market forces, but RBI has completely failed by adopting mismanaged monetary policies. We all know that in present global economic scenario, lower interest rate, weaker currency, lower bond yields are beneficial for growth, inflation and employment of national resources. But in Indian context, we are seeing a different picture. Here we are facing just opposite thing against the global economic forces in global economic market, which is flooded by global cash liquidity. In Indian context, we are seeing rupee is appreciating, bonds are appreciating, the stock market is buoyant, and in the midst of these things, the Forex market as well as crude oil market is highly volatile, which becomes beyond the control of RBI. These mightier forces are influencing and impacting badly on Indian economy, and we are forced to suffer out of RBI's mismanaged monetary policies. In currency market, we see rupee is appreciating. It is appreciating not out of inflated or imported inflation. It is a wrong perception has been put into the Indian economy by RBI. It is not imported inflation. RBI has purchased $541 billion to expand their Forex reserve. So our Forex reserve is $541 billion and it has been purchased by RBI, none else. Only RBI is responsible to give answer to our economy that how it has happened and in what circumstances RBI monetary policy has chalked out such type of foreign exchange reserve. Out of $541 billion, 92% are parked into US currency, securities and assets. And we know that US currency is depreciating. Interest rate is going below to zero level. In these circumstances, the earnings or income earnings on our heavier $541 billion Forex reserve we are getting lesser and lesser income earnings and our rupee is appreciating. Who is responsible for this situation? It is not an imported inflation. It is a wrong or mismanaged monetary policies who has amassed or who has parked this lump sum of Forex reserve, and we are reaping this mismanaged monetary policies result. Our Forex reserve is or have become burdensome over this situation with the depreciated US currency, US interest rate, US assets, and we have got appreciated rupee. This is the situation. On the other hand, our external commercial borrowing has increased, which has entered into the Indian economy in rupee denominated form, and it has increased the rupee liquidity in Indian economy, and it has also appreciated the rupee. And for it, none other than RBI is responsible, because RBI is sole and whole authority to control foreign currency. On the other hand, our Forex reserves are become burdensome because of infusion of speculative foreign funds into our stock market to gain higher profit because of highly volatile or highly buoyant Indian stock market. And out of this infused foreign cash into Indian stock market through rupee denominated form is also increasing the rupee liquidity in Indian economy. And for this, as a regulator of finance, it is RBI, none other than, is responsible for it. It is not an imported inflation. It is just simply the mismanagement of RBI's monetary policies, because RBI is the whole and sole authority to control the foreign funds. On the other hand, in bond market, we see rupee is appreciating. Although Reserve Bank of India have tried their monetary measures like open market operation, twist operations, interest rate cut, and purchasing of higher and higher government bonds. But all these have become ineffective because government's GDP or government's debt to GDP has increased. External commercial borrowing to GDP has increased. Government borrowings has increased. Government financial physical deficit has increased. All these have not only neutralized but have strongly superseded the monetary policy measures. And who are responsible for it? None other than RBI. So it is not an imported inflation, it is simply the mismanagement of RBI who is blaming imported inflation. And in this situation, rupee is appreciating and our economy is suffering. In the stock market, we see rupee is appreciating because a heavy infusion of a speculative foreign funds through rupee denominated form into Indian stock market to reap out higher benefit out of volatility or higher volatility index of stock market. And out of this higher volatility index of Indian stock market, foreign funds have been infused enormously, and being a regulator of finance, It is RBI, and it becomes duty of RBI to control these liquid funds in the Indian economy, because global economy is flooded with highest level of liquid cash, and they are gaining profit out of buoyant stock market of India. Who is responsible for it? In the crude oil market, we see that out of total crude oil consumption, India imports 82% for its consumption. But in 2020, Indian economy has curtailed 58% of imported crude oil, and this has saved our foreign currency and our Forex reserve. This has not only saved our Forex reserve, but it has added into the Forex reserve. And who is responsible for these things? Only RBI. Only RBI is answerable that why RBI has increased or enormously so much of foreign Forex reserve, and in what circumstances. In other situations, we see that our Forex market, Indian rupee is appreciating because US dollar is depreciating. Interest rate in US is going to below to zero level. In this situation, not only US but other developed countries have also depreciated their currency and lowered their interest rate even below to the zero level. In these circumstances, our rupee has been appreciated, where interest rate is higher, and we are facing inflationary situation, and it is not other than RBI is simply responsible for this situation, because RBI has decided to part this large sum of Forex reserve in the form of US currency and other developed nations' currencies in the securities in assets of USA, and it is more than 92% which has been parked by RBI into US currency assets and securities and other developed countries' currencies. So, who is responsible for it? This is not imported inflation. This is a mismanagement of RBI, and RBI should answer to the people of India why it has happened. In these situations, we see that rupee is appreciating, our inflation rate is rising, debt to GDP is rising, external commercial borrowings is rising, and our Indian stock market is buoyant, and it becomes beyond the control of RBI to be rent, because RBI's wrong or mismanaged monetary policies are responsible not to control these mightier economic global forces or internal global forces. RBI is sole and whole authority to control fund externally and internally, but here RBI has completely failed to perform their monetary policy making responsibility. So we are going to discuss, or we have performed, or we have presented this situation before you to consider whether it is RBI responsibility in the matter of finance, whether it is related external or internal, whether it is imported inflation, and if it is imported inflation, then who is responsible for it? But we personally know that it is not an imported inflation. This is a mismanagement of RBI's monetary policy in favor of government that have made the situation worst in Indian economic scenario in the midst of global cash liquidity. Thanks a lot of thanks to my viewers, our economists, our financial institutions, government and other political parties should consider over it. Thanks a lot of thanks.